Testing. This microphone is working. Okay. Good morning, and thanks for coming. Can you hear me? Okay. Before I get into the report, let me just say that we are deeply saddened by the recent disasters in Lombok and Sulawesi, and we would like to send our sincere condolences to the survivors and friends and families of the victims and the government of Indonesia. So let me first summarize the main messages from our regional economic outlook. Good news first. Asia has made remarkable progress over the decades, and it is now at the forefront of the global economy in terms of growth. Indeed, Asia accounts for more than 60% of world growth at this moment. So growth as of now is at this moment is relatively strong. But the region faces important real-term risk, including from tighter financial conditions and the rising trade tensions, which we will discuss shortly, as well as higher oil prices. And in the medium term, there are also some fundamental challenges, including the sustainability of Asia's trade-led growth model and the slowdown of productivity, and the risk and opportunities posed by the digitalization trend. Let me expand on these topics before turning to your questions. Our new forecast first. As our Managing Director, Christine Lagarde, said at her press conference yesterday, the world economy is still strong, but the global environment has become more challenging. The US dollar has strengthened, US interest rate and oil price has increased, and trade tensions has risen. These headwinds have put pressure on many emerging market economies, and Asia countries are no exception. On account of these headwinds, Asia is projected to grow by 5.6% in 2018, unchanged from our forecast in April, and it will grow 5.4% in 2019, down by 0.2%, a percentage point from our forecast in April. Inflation across Asia is projected to increase to 2.8% in 2018 and 2.9% in 2019, reflecting higher commodity prices, but still it remains below target in several Asian economies. In China, the authorities focus on deleveraging for the sake of financial stability, implied slower growth this year, and that was both appropriate and desirable from the fund point of view. Recent tariff actions, however, have provided additional drag. China's growth remains at 6.6% for 2018, but we have marked down its growth rate for 2019 from 6.4% to 6.2%, reflecting the direct impact of enhanced trade tension. We estimated it will have about minus 0.7% negative impact on growth from these currently announced packages, tariff packages. But we believe that China has an ability to offset by stimulus policies by about 0.5% of growth. So in together, we expect that the current package of tariff has a negative impact on China by 0.2%. That is the main reason why we revised down China's growth rate for 2019 from 6.4% to 6.2%. But we can discuss trade issue a little more later. In Japan, the economy is projected to expand by 1.1% in 2018, above potential growth, and expected to growth rate will change to 0.9% in 2019. In India, growth is expected to pick up to 7.3% this year and 7.4% in 2019, but this forecast has been slightly revised down on account of higher oil prices, tighter global financial conditions, and increasing global trade tensions. In ASEAN, growth is resilient, but set to slow as the external environment becomes less favorable. For example, our hosting country, Indonesia, still maintain a relatively resilient growth rate of 5.1%, both in 2018 and 2019. Growth in most of the region at this moment, including small state and Pacific Island countries, remains resilient and strong. But regarding the risk, as I mentioned in the beginning, the balance has shifted to the downside in the near term and medium term. The first risk is a tighter financial condition in the global financial market as the U.S. Fed continued to raise interest rate. Asian economies has so far been less affected by this tightening trend compared with other emerging economies in other regions, but policymakers need to remain alert. Our simulation suggests that the continued tight financial conditions could lower the Asia's GDP by as much as 0.75 of a percentage point. The second risk is the escalation of trade tensions. There has been several rounds of tariff already, and further tariff also has been proposed. For example, on the remaining 267 billion of China's export to the U.S., as well as on the global automotive trade. Considering all this current and proposed tariff, as well as their knock-on effect on investment confidence and financial market, our scenario shows that in a worst scenario, the peak impact on China's output could be as large as 1.6% over the first 2 years, and for the U.S., the impact could be by around 0.9%, and Asia as a whole, the impact could be the GDP loss up to 0.9% in 2 years. I should note there, but the short-term policy stimulus, many Asian economies has room for relying on the fiscal spaces, and they have, we believe that short-term policy stimulus is expected to offset much of the impact that I just discussed. Now moving to the long-term challenges. Asia faces several medium and long-term challenges. The first one is slowing productivity growth, and Asia's productivity growth has slowed down as it is for other regions. And our analysis firm-level data shows that an important driver of this slowing productivity growth has been a decline in firm dynamism. By it, I mean that the declining of firm entry of the young firms, and then also the exit of the so-called zombie firms. And the lack of the dynamism in the firm entry and exit is one of the main reasons for the slowdown of the productivity growth in Asia. Asia is also at the forefront of digitalization. Our research finds from various sources of evidence several interesting findings. Asia is forefront of the digitalization, and digital innovations such as IT sector alone account for nearly 30% of Asia's per capita GDP growth over the past 20 years, and this impact will further rise. And we also find that the e-commerce is quite popular in Asia, and many companies who has an access to e-commerce has usually have a higher productivity than compared with a company who doesn't have access to e-commerce. And also, digitalization can help government boost their tax revenues and their target spending more efficiently and more transparently. At the same time, we find that the automation, such as the robotics, can displace some workers, and at the same time helping the aging problems. And fintech innovation is quite rapid in Asia, can have its positive impact, but also the implication for the adverse impact on financial stability. So what does this all mean for Asian policymakers in the short term and medium term? I think in the short term, we would like to emphasize that Asian policymakers should be confident, but not complacent. The region has a strong fiscal and external buffers, good policy framework, robust growth, and is well placed to withstand the shocks. And that said, we believe that today's headwind, whether it's a financial market tightening from the advanced economies, whether this is a trade escalation of trade tension, could persist for a long time. At least the U.S. interest rate phase will last more than a year. So for this reason, we believe that it's important for the policymakers to save their ammunition for when it's truly needed. So what does it mean practically? We believe fiscal policy need to focus more on the building buffers. Exchange rate should be kept flexible and allowed to act as a shock absorber. And in some cases, if inflation rise together with depreciation, monetary policy need to be tightened. So in general, we believe Asia is better equipped in dealing with headwinds. Be confident, but need to be should not be complacent. Second, in facing the trade tensions, we believe Asia needs to open more than close. Policymakers can take the opportunity to offset the decline in external demand by liberalizing their own trade and investment regime, particularly in the service sector. We have a study, and our simulation suggests that for the opening of Asian economies, China and many other Asian economies, even if pursued unilaterally, can boost many economies' long-term growth by 5 to 10%. So Asia growth has been led by the trade, multilateralism, but it still has a large room to gain by opening, even unilaterally, to the world. Third, strengthening firm dynamism, allowing young dynamic firms to enter, as well as facilitating the exit of the zombie firm, is an important way to boost productivity and develop new source of growth. And finally, the digitalization. This can be a new source of growth for Asia, even though we have to address the risk of accompanying risk. Measures to improve education, infrastructure, regulatory environment would help to make digitalization an even more important engine of growth in the near future. So conclusion, in sum, Asia's growth remains resilient. Growth at this moment is strong, but there are challenges both in the short term as well as medium term. Policymakers should be confident but not complacent, as the headwind can last longer than expected. Maintaining sound macroeconomic policies and face of the structural reforms will help ensure that Asia remain at the forefront of the global growth over the coming decades and beyond. Thanks very much. With that, we are happy to answer your questions.
Thank you, Chang-Yong. Now we can take your questions. Please identify yourself and keep your questions brief. Let's, the lady in the second row in the middle.
Hi, thank you everyone. My name is Rahmadea from the Jakarta Post daily newspaper based in Indonesia. I just have 2 questions for the zooming in on Indonesia. As Mr. Lee said earlier, that Indonesia, just like the rest of the region of Asia and Pacific, and still remains resilient, but we have more challenges ahead. So seeing that the IMF has earlier predicted a dimmer economic growth on the region and as well as Indonesia, what is your view on this dimmer projection? Do you feel the same way as the IMF does? And the second one, what kind of policies or other aspect that the government should focus on in order to maintain a resilience and strengthen the economy amidst all of these challenges? Thank you.
Can you get 1 or 2 questions?
Yes, and we have the front row here. Yes, the lady in the front row.
So Indonesia will.
Thank you, Ting. Morning, sirs. Grazie Simanjuntak Antara TV. Indonesia is a country that contains great economic potential that hasn't gone unnoticed to be part of the global community. Now, how do you find Indonesia's macroeconomic stability in global market? What are Indonesia's strengths that explain structural economic, macroeconomic growth? Thank you.
I think both questions are about Indonesia, so let me just ask Ken to answer, and then we probably correct the 2 to 3 questions and then answer. Please.
Okay, thank you. As Chang-Yong mentioned in his opening remarks, the global economic environment has become more challenging, reflecting U.S. monetary policy normalization, a stronger U.S. dollar, and higher international oil prices. And these developments generally have affected emerging markets, including Indonesia and other countries in the region. The Indonesian rupiah has declined by about 11% against the US dollar, but other countries, including the advanced economies such as New Zealand and Australia, have also seen their currencies fall by as much as 9%. So Indonesia is not exceptional in that regard. Despite this turbulence, the economic fundamentals in Indonesia remain sound, with low public debt at about 30% of GDP, continued robust growth expected to remain above 5% this year and next, inflation remaining within the target band, and ample international reserves at over about $115 billion US, and a fairly robust financial system with a healthy capital ratio above 22%. Moreover, the Indonesian authorities have reacted appropriately to these external pressures by pursuing policies that prioritize stability. This includes a tightening of monetary policy by raising the policy rate by 150 basis points since May, by targeting a lower fiscal deficit, and by allowing the exchange rate to adjust in line with market conditions. In addition, it's important to remember that Indonesia has taken important reforms in recent years by adopting inflation targeting, a fiscal rule, and Basel III standards, as well as opening up its FDI regime. We support these measures as they will help to safeguard macro and financial stability. But in addition, Indonesia has the capacity to boost potential growth over the medium term. We just recently issued a book titled Realizing Indonesia's Economic Potential, where we lay out the case for a comprehensive package of structural and fiscal reforms that can lift growth over the medium term. This includes a medium-term revenue strategy that aims to raise additional revenue of about 5% of GDP, which can be used to finance higher spending on infrastructure and on social areas such as education, health, and job services. Combined with comprehensive structural reforms in the labor and product markets, which will help to stimulate private investment and activity. These two combined reforms has the capacity to lift potential growth in Indonesia by as much as 1% over the medium term. So to sum up and to repeat the key message, Indonesia can be confident as it remains resilient, but at the same time, it must be vigilant and adapt quickly and flexibly to changing macroeconomic conditions by pursuing sound macro policies and vigorous structural reforms.
Thank you. Let's take 3 more questions. The gentleman in the 3rd row, please. Please wait for the microphone.
Working.
Thank you. Li Zhengxin from Caixin Media. Mr. Ri just said even for unilateral agreements, Asian countries should promote openness more. Here, people also talk about fixing and reforming the global trading system. I wonder, from a supply chain standpoint, how Asian countries could get involved, contribute, or even influence this process. Second question on China. Governor Yi said yesterday that China's monetary policy remains neutral. And in your report, I feel I worry from you that China may stimulate the economy again, then slow down the deleveraging process. I wonder, on what conditions do you think is necessary? It is the time to reverse that course and to stimulate again. Thank you.
Thank you. Yes, we have a question in the front row. Yes, thank you.
Thank you. I'm Franziska Richter, ARD German Television. I've got a couple of questions focusing on the Philippines. And so how are the Philippines planning on paying back their debt, given that the US interest rates are rising and the dollar is getting stronger? And how are they trying to fight inflation? People can't afford basics such as rice or fuel anymore.
Thank you. Yes, one more question here.
Hello, my name is Rashmi and I'm from Global Markets newspaper. Indonesia and Singapore yesterday signed an agreement for a $10 billion swap line. Do you think that could trigger more of these bilateral agreements between different Asian economies? And if that happens, how will it impact IMF's role in lending to these countries and their relationship with these countries? I also have another question. You mentioned rather broadly on how central banks, the policymakers, need to be alert to the global changing environment. Are there any specific changes that any of the countries or the policymakers in Asia need to be thinking about more so than others? Thank you.
Thank you.
So, for the question about China monetary policy, I will ask Marcus answer first, and then move to other question myself. Please go ahead, Marcus.
So, China's economy has experienced some slowdown already earlier this year. That slowdown was somehow expected because it reflects the progressive adjustment of financial conditions due to the deleveraging and strengthening of financial supervision, reining in shadow banking. We expected that, and as Chang said, this was welcome. So financial conditions in China have tightened because of that. Second, we have seen local governments in the course of this year profoundly change their investment policies. In fact, local governments in China have fallen way short of their annual investment program. So these two things combined have slowed the economy. On top of that, we have now some external shocks, rising trade tensions, emerging market stress, exit from UMP. So these things together probably impacted some stronger drag and slowdown force on the economy. And in that context, we have seen adaptation of monetary policies in China, the 100 basis point reduction of reserve requirements. But and when the governor says that the policy remains neutral, what he means, probably, although I can't really speak for him, is that the financial conditions overall remain on a tightening bias. They just have taken their foot off the brake a little bit because the combined forces of financial adjustment, local government slowdown, and external shocks were really exerting more of a drag. So overall, I think your second question, is it time to stop the adjustment and reform process, or otherwise is it time to stop easing? I think very clearly and they themselves have said so, this is absolutely no reason to throw out the deleveraging effort. I think the deleveraging effort has to continue and is continuing, particularly on the regulatory side. You've seen the financial regulations in the asset markets, in the shadow banking, that continues to happen. And by the same token, policies have to be adjusted every day, every week, to the overall conditions. And I think that is what we're seeing now.
As for your question about the multilateralism and the global trading system, I think basically I want to repeat what MD mentioned. Fix it, not break it. Because many Asian economies has benefited from this global trade system, multilateralism. And also, as I mentioned, our study shows that there is still large room for Asia to gain from the further opening. So if the trade tension between US and China escalated, still Asia will be much affected because many Asian countries are exposed to both China and the United States. But by opening more, even unilaterally, having changed their supply chain more within themselves with other regions, actually many Asian countries can actually gain. That is our point. So rather than retreat from the multilateralism trade, Asia raised its voice because as a biggest beneficiary of the trade system, they can show by example the benefit from trade. And actually another issue is that this past trade regime it was not expect many new changes, technology changes, and how to handle the different economic system. Service sector is much more important. So Asians also can contribute to fix the current trade system by incorporating the new issues and improve it. And as for your question about bilateral swap for India and Indonesia and the Singapore, I think we welcome because basically we are thinking about safety net in 3 different levels. Individual countries' own effort, which is including the sound macroeconomic policies, also reserve level, also regional safety net, including the bilateral swap across the countries, as well as a regional swap arrangement, multilateral swap arrangements such as AMNO and CMIM, and also global safety net, which is IMF. So these 3 things can be complementary. That is why we emphasize in the governance reform of the IMF. So we need to have enough ammunition to prevent the global side shock. But also it can be complemented by regional as well as individual safety net. And this bilateral swap between Indonesia and Singapore, I think, is a good way of strengthening this regional safety net. And as for you ask also, what is a kind of some new policies that Asian policymakers, different from others, has to focus on? I mean, you can answer in whole day long, but I want to say that given that Asia's relative position is much more sound compared with other emerging economies, which has a large pressure at this moment, they have to rely on some unconventional, policy response, such as capital control and some import restriction or unconventional policies. But I think I want to emphasize that many Asian economies are subject to the same dollar strength shock, but their fundamental is much more stronger. So they don't need to be kind of seen desperate by relying on these unconventional policies, especially during the capital inflow period. There is many academic evidence that some unconventional measures can have an impact. But I have never seen that during the outflow period, whether there is a strong, whether the effectiveness of unconventional policy is strong or not. Given this, I think Asia policymakers has to rely on more fundamental response rather than butter response, focusing on more sound macroeconomic policies, keep the good fiscal stance and, manage the current account and having a macroeconomic policy to address this issue instead of being relying on some unconventional policies, which will make them look as desperate as some of the countries which are really under pressure. So we Asian policymakers need to be confident, need to distinguish themselves from the other emerging economies. And then Philippines, you can answer.
The question on the Philippines, I think there were two parts. One was on the capacity to repay external debt as interest rates rise, and second on steps to fight inflation. Overall, I think the debt repayment capacity in the Philippines remains strong. If you look at some of the numbers, public debt as a share of GDP is relatively low at about 40%. External debt as a share of GDP is even lower at 20%. The current account deficit has increased on the back of higher oil prices and import demand, but at 1.5% deficit, it still remains manageable. Moreover, reserves at about $80 billion represent 7 months of import coverage and about 4 times the size of short-term external debt falling due. But perhaps most importantly, growth remains robust. We're projecting growth to be at 6.5% this year and to rise further to 6.7% next year.
Thank you. Let me turn to a couple of online questions we received earlier. The first question is on Japan. Deputy Managing Director Mr. Furusawa said that BOJ will likely take a backseat when the economy faces a downturn, as Japan was already doing quite a lot on monetary policy. Does the IMF think it's almost time for BOJ to start normalizing policy? If not, how can Japan prepare tools to ramp up stimulus when needed? Another question is on India from PTI. What impact the recent devaluation of rupee would have on Indian economy? And what does it tell us about the status of the Indian economy?
There are many other questions, so can I have a quick answers for questions?
Yes.
Thank you.
It's on.
Okay, so let me first mention, when I have a chance, that we concluded the Article 4, the 2018 Article 4 consultation mission with Japan last week on October the 4th. And the Managing Director, Christine Lagarde, gave a press conference, and that's on the IMF.org, as well as the concluding statement. So we have a fairly recent comprehensive assessment of Japan, if you want to look at that. On the question, do you think it's time for the BOJ to consider exiting from the easing policy? The short answer is no. Maybe that's too short, so let me elaborate a little bit. We think it's too early to talk about normalization of monetary policy in Japan. Reaching the inflation target is a central objective of Abenomics, and it's one that is likely to take a prolonged period of time. This is what we have learned since Abenomics started 6 years ago. Given that, it is very important to ensure that the current accommodating monetary policy stance can be sustainable. And that is why we support the Bank of Japan's yield curve control framework, introduced in September 2016, and which put monetary policy on a more sustainable footing. The focus now is on how can you make it even more sustainable. And in that sense, or in that regard, the changes in the monetary policy framework introduced in July, which included a bit more flexibility on yields, that included, importantly, forward guidance on interest rates, we think is a step in the right direction. There are further steps that could be taken to further boost inflation expectations, such as moving towards a standard formal inflation targeting framework with forecasts of staff interest rate projections, etc., that the Bank of Japan can consider. Let me make one final point, which is that monetary policy cannot do it alone. What is needed is a comprehensive, mutually supportive package of fiscal, monetary, and structural reforms. And I'll stop there. Thank you.
On the question on rupee depreciation, I think it's still too early to make a full assessment of its economic impact, but it appears so far the impact looks to be limited. Growth remains fairly robust, as we're 8% in the most recent April to June quarter, and is expected to accelerate from 7.3% this year to 7.4% next year. On exports, for the first 5 months of the fiscal year, exports in US dollar terms have risen by about 16%. It will take some time to see the impact of the depreciation on exports, but a weaker rupee has the benefit of improving competitiveness, especially as other countries are also allowing their exchange rates to adjust.
Thank you. Let's take a couple more from in the second row, please.
Thank you. Enda Curran from Bloomberg News. Another question for Odd Purbrick, please. Do you think it's correct for Japan to push ahead with the GST increase next year? Thank you.
Let's take one more in the fourth row. Yes.
Hi, Simon Rockmean from Nikkei Asian Review. On the debt issue, your colleagues a couple of days ago highlighted the growth in global debt. Can you talk a little bit about that and which countries in your own particular region are especially vulnerable on that issue? Thank you.
You want to go to GST first?
Okay, so thank you. No, this is an important question. Now, the government has reaffirmed its commitment to go ahead with the consumption tax increase in October 2019. And from our perspective, this will bring in much needed revenue. The important thing here will be to implement a temporary mitigating set of measures so that you make sure that fiscal policy remains supportive of inflation and growth under Abenomics. And more specifically to that end, we have recommended maintaining a neutral fiscal stance in 2019 and 2020. So when the consumption tax increase comes into effect, we're suggesting temporary measures that could support consumption and to have a more even path for GDP. And this is also important in terms of communication, that the government communicates very clearly that it's going ahead, and I think that's what we're seeing. Over the medium term, final point, beyond the 2019 consumption tax increase, we support a gradual fiscal consolidation of about 0.5% of GDP per year. But this should be in the context of a well-specified and a credible medium-term fiscal framework. And on the consumption tax specifically, we're suggesting a continued gradual increase, steady increase, until the rate reaches at least 15%, and combine this with reforms to government healthcare and pension spending. Such approach, we think, would help protect growth while putting the debt on a sustainable path. Thank you.
For your question, which country is vulnerable for the debt accumulation? You know, the fund is not a credit rating agency, so I do not want to kind of discuss the individual country, vulnerability. But on the other hand, the problem of debt accumulation, large debt by our veto emphasized a few days ago, Asia is not an exception. One difference from Asia versus others is that many advanced economies, after the global financial crisis, public debt increased quite a lot in coping with the global financial crisis. On the other hand, in Asia region, the private debt and quasi-public debt has increased quite rapidly. So the nature of the debt accumulation is different, but still, after the global financial crisis, it's true that in Asia, the leverage and the debt level has increased quite significantly. At the same time, I think what we are worrying about in Asia is like more speed. The speed of accumulation and how fast that debt has accumulated is quite rapid in some cases. So even though they have good buffers, And also, if you consider the asset side, which is, Vito emphasized it, not only the debt side, we look at the asset side, looks like Asia has many buffers. But the fact that they accumulated private, quasi-public debt very rapidly means that there can be some risk of the misinvestment. Efficiency may have a problem. So eventually it may backfire later. So these are the kind of issues that Asia has to be concerned. So this is a common problem.
Thank you. Let's take more. Yes, a gentleman in the sixth row. Yes.
Thank you very much. My name is Masaki Kondo, GG Press from Japan. I'm just wondering the trade tension between the United States and China. It's no doubt we're going to have like short-term impact. But if we look at long-term, do you think it will promote regional integration in Asia and Pacific Asia if the companies shift supply chain from, let's say, United States to Asian countries? So actually, it could be opportunity for Asian countries for the development. Thank you very much. Maybe, it could promote like ACU, Asian common currency issues, or monetary or economically, it's going to be, integration opportunity for the Asian country, Asian Pacific region. Thank you.
Yes, let's take a couple more questions. Yes, lady in the second row.
Hi, I'm Mika Kihara from Reuters. I'm just wondering how you see the most recent stock market falls and some rapid movements in the currency market affecting Asian economies. I know that we shouldn't focus too much on short-term market moves, but the declines have been pretty significant, and there are some concerns that this could be a deeper adjustment. So just trying to get a sense of how you feel about potential impact on the Asian economy. Thank you.
Thank you. Do we have more questions? Okay, maybe you can answer.
For the second question first, I think it's a little bit risky to comment on the recent volatile movement of stock prices, but in my opinion, this really shows very well how the global world is integrated. Now, U.S. stock market falls, the next day, Asia stock markets fall by 4-5%, and it has a spill back again to U.S. market. Whether this is because of the global financial market tightening, whether it's due to the fear of the trade tension, all these things. So I think this is one of the reasons why we feel that this headwind may last longer unless this problem is resolved quickly. So I don't know what will be the end of this current turmoil. Many countries have buffers to react, so we'll see how it goes. But I think the lesson that we have to take is to see how much the whole global financial market and the real economy is well integrated. So no one can be free from these shocks. That relates to the first question that you asked. I take your question to ask whether there can be a winner if there is a trade tension between U.S. and China. There can be a trade diversion, even in the short term, medium term, whether there can be a winner and winner also, not just for losers, and whether it really promotes some kind of regional integration. Theoretically, yes, in the short term, because our study shows, graphs. For example, like, China cannot import U.S. soybean. Now they are importing more from Latin America. So in the short term, they can there can be a winner and losers depending on the supply chain. But our simulation really shows that this direct trade impact is quite small compared with other impacts such as the confidence, business investment, and also the financial market impact. Because in the financial market, everything is connected. So yes, probably it may, companies and firms will try to develop a new supply chain. But if you exclude the U.S. and China, which is number one, number two in global market in this tension, all others can develop a new system which can actually compensate all this loss. That I'm very doubtful. So I think overall, I think the MD's remark, in the end, when this there will be a no winner from the global trade tension. I think that's I think quite accurate assessment.
Thank you. Do we have more questions in the room? Yes, there's a question in the back.
Hello, I'm Linda from the Straits Times. My question is, could you elaborate what are the greater risks faced by Southeast Asian economies in the short term, considering we trade a lot with China and also part of supply chain with China? And also, what are your policy recommendations? Thank you.
I think in the opening remark, I mentioned 3 risks, right? Global financial market tightening, so which means the dollar appreciation, and the other is the trade tension, and the third one is actually oil price hike. So in the short term, I think that the higher oil prices has a large impact in this region, in current account, other things. But what we are worrying about is combination of all 3. Okay, if it's all combined together, even the Asian's financial fundamentals is quite strong, and it requires right policy and good macro management. So I think if you ask me what is my best advice, Asia is moving fast because our fundamental is very good. The shock is from outside, so headwind is coming. So what is the best policy? Probably it will be going a little bit slower to make it safe. So then I see how it goes. Then maybe the first policy. Now I know that many Asian economies are facing elections and many political agenda, but because of that, if you want to keep on going too fast while the headwind is coming in, you may make a mistake. So I think my first advice, given your strong fundamentals, given the headwind is coming from outside, make it a little bit, be cautious and a little bit more conservative. Still, you are going faster than the others.
Thank you very much, Chung Young, and thank you very much for coming today. This concludes our press conference. You can get the hard copies of Chung Young's remarks in the press center, and we also encourage you to attend our other regions' press conferences in the afternoon. Thank you. Have a nice day.
Thank you. Thank you.
Thank you.
No, it's okay. Someone else might react.